Well, grains ending higher on a Tuesday. Randy Martinson with Martinson Ag is back with us with analysis. And Randy, let's start off talking about the corn market. Strong close, new highs for the move. Is it still all about fund short covering? Is there more to it?
Well, I think that's a lot of it. I mean, it's a big part of it. I mean, right now, I think the report has the funds right now holding their smallest short position in 4 years in corn. So I think that's really helping to keep the market pushing forward. We're seeing decent demand, from other, as we're seeing Mexico and unknown destination buying corn from the U.S. I think yields being variable, all that is coming in to help support the market. And also that the fact that I think USDA, which proved it in their report earlier in the week, that our stocks aren't quite as big as what we thought they were going to be. And I think all that's coming in to help support the corn.
You bet. So demand may be a little bit better than anybody thought. So let's talk about the technicals, because December corn right up in that 430 area. Where's the next objective technically we need to go to get the funds to keep buying here?
Well, I think it's got to cross above 435 and close above that. I mean, we broke up above the 430 level today. We couldn't hold it. We slipped back down. So I think if we can get above that 435, that could open this thing up to 450. We still have a fairly good sized ending stocks estimate coming. So it's going to be hard to look at the corn market to do a runaway. But as long as the funds want to continue to cover their positions, it really isn't going to matter where the stocks estimate falls.
Yeah, it looked like maybe crude oil helped out as well. We had a nice rally there today. Some of that looked like we were putting in war premium. Were we also putting in a little bit of war premium in the wheat market, or was that all weather?
Well, I think it had something to do with the war. I mean, I think weather started the market and held it up for most of the morning. But I think once we started to hear the reports of Iran lobbing some missiles into Israel, I think that really did help support the wheat. We could see the wheat market kind of, pushed up to the next level higher. It hit double-digit gains once the reports started coming into play. So I do think there is some concerns about the Middle East and the escalation of this war.
Yeah, and there still are concerns about global production issues. So there is some weather premium too, right?
Oh, most definitely. You look at the Black Sea region. Ukraine is hot and dry. They're lowering their production estimates and lowering their potential planting acres. Even we're looking at trouble with Russia. Australia's seeing trouble, and even the U.S. We're looking at hot and dry conditions for the Southern Plains, which is going to likely slow down some planting of winter wheat.
Here again, wheat market kind of closed right up into some chart resistance again. Are we going to be able to get above those levels?
Wheat actually seems to be kind of like the leader. It's been the one that's been kind of pushing us and being able to have the strength when the other markets would kind of collapse or struggle a little bit. I do think wheat's got some chance to see a little bit more strength. Trouble is we need to start to see exports develop to be able to hold this strength.
And obviously, soybeans trying to follow corn and wheat markets. You're seeing kind of a tug of war between fund short covering in the soybeans versus harvest pressure, aren't you?
I think we are. I mean, and right now it looks like the fund short covering is winning because even on we started the market the last couple sessions down pretty good. And the market was able to come back and trim those losses. I do think that right now the funds are kind of leading this thing. We're seeing good harvest progress, and a lot of those beans are coming to town, which we kind of saw clarification of that in the stocks report. As right now farmers are sitting on a lot of old crop, and a lot of the new crops got to be coming to town. And I think that's what's happening to the beans.
Do you think that the soybean market has also been trading maybe a little disappointment on yield?
Oh, most definitely. I mean, everybody's a little bit disappointed in their yields. Most guys I know up here in the Northern Plains and the Western Corn Belt have been talking about average yield. You get an occasional field that might be a little bit better than average, but most of it is coming in a little bit disappointing. The drowned out spots and the wet spring certainly is showing up in the yield.
So these Brazil rain chances that we see in the extended forecast, if those materialize, could we take a lot out of this market? And conversely, if they don't materialize, how much weather premium does the market need to put in?
I mean, that's some good questions. I do think that if the rains do develop, and they are going to get rain at some point, it's a matter of when. And you're right that if it happens short term, I think we could see quite a bit of premium come out of the soybeans. I wouldn't be surprised to see this market break down to that 10.40, possibly into the $10 range once the rains develop. If we don't see the rains develop, though, I think this market could break above that 1085 and test the $11 area. If we break above that, then we're looking at 1140.
No doubt. Again, from a technical standpoint, though, we keep running up into chart resistance. Where do we need from a chart standpoint to push above?
Well, we keep flirting with this 1065. We gotten up there a couple times. I think if this market can get up to that 1085, that's the next level of major resistance. We get a close above 1065. I think we're looking at 1085. Then the next level is going to be 11, which might not be that hard to do once the funds really start to cover their short positions.
To have had a rally of this magnitude during the middle of harvest or at the beginning of harvest in soybeans, how much of a gift is that, and how much should producers be doing on that in terms of selling?
Oh, it's a huge gift. I mean, there's not many times you see the market rally, especially when you're looking at an ending stocks estimate that's expected to be close to 300 million bushels for like we do have for soybeans. So I think that's why a lot of beans are coming to town. It's giving the producers an incentive to keep moving the product. Basis levels continue to be fairly decent as well. So I think farmers really need to take advantage of these higher prices, or at least these improved prices from what we saw just even a couple months ago.
Overall, we know the funds, Randy, got out of a lot of their short position here in all of the grains here recently. Do they keep adding, or I guess exiting short positions here now into this fourth quarter?
At this point, I wouldn't expect that they'll go into a long position, but I expect that they'll work their way to be at least flat. And if we do see the rains delayed as far as South America is concerned, and we get into the second half of October, then we might be able to see the funds start to look at going long, because at that point, then we start to change the dynamics of where China and other countries will be getting their soybeans and their corn.
Cattle market to the plus side, live cattle futures actually made some new highs for the move once again here, December above some pretty good resistance. The funds look like they're back in there pushing the market. Are they going to continue to push, and how far?
Well, it's been interesting watching the cattle. I figured that we'd see a little bit more pressure come in at this time frame. Seasonally, we see a little bit of that. But live cattle, our supplies continue to be tight. Our cattle on feed numbers were somewhat friendly in the last report. I think that the domestic demand and the box beef markets continuing to stay fairly strong. And I think that's helping to encourage a lot of buying into the live cattle market.
In addition to the fact that this is the third week we've had higher cash trade. And so if cash continues to, I guess, move forward, is that going to keep pushing the futures?
I think it will, because that's going to, I think at some point we'll start pulling cattle ahead. Right now, feedlots are somewhat current. We've got some heavy weights out there, but if we continue to see strong demand, I think that could be a positive for the live cattle market anyway.
And feeders did end higher today, but not into new highs for the move. And so that market are we going to be able to keep pushing higher here, do you think, especially since we're into some of the new supplies and we are seeing a little bit of push from the higher corn?
That's going to be a difficult one to do. I think as long as live cattle can stay firm, that's going to encourage the feeder cattle market to have at least a little bit of strength. But its gains are going to be tempered by the fact that we are looking at supplies being available. We are looking at a little bit higher corn prices. So, and I do think that one's going to be a little bit tougher to maintain its strength. But once we get past the seasonal move and we see a lot of the calves move here this fall, I think then we could start to see a little bit strength come back to the feeder cattle market.
And the hog market ending higher today, despite the fact that we have this port strike, which should be negative for the market.
You would expect that. I mean, exports have been one of the important things. Again, the hogs and pigs report wasn't that friendly for the hogs, so I'm surprised that this market's holding on. Maybe we are seeing a little bit better domestic demand than what we anticipated.
Yeah, it's been really resilient, but the funds are in here buying. Has this move been mostly technical in your mind?
Oh, yes, I think it has been mostly technical. I mean, we're trying to recover off of some lower levels that we saw, especially when we saw such an inverse in the markets, especially when some of the earlier months were going off the board at such higher levels. So I think that a lot of this is being pushed by technicals.
No doubt. The futures discount to the